Okay, so let's jump right in. Today we're going to get into this 10K annual report, right? Sable Offshore Corp.
Yep. Filed with the SEC, the good old Securities and Exchange Commission, for the fiscal year ending December 31st, 2024. Hot off the presses.
So we're talking about Sable Offshore. This one came from one of our listeners, by the way. Requested that we take a deep dive into this, so we're going straight to the source.
Yeah, absolutely. And I think a lot of people are going to benefit from understanding this company's story because it really touches on a lot of, critical things in the energy sector today, right? This deep dive, think of it as like an exclusive backstage pass to, figure out what Sable's been up to lately and maybe even get a glimpse of what their future
And
holds.
what better way to do that, though, with a 10K, really get into the nitty gritty.
Oh, yeah, straight from the horse's mouth.
All right, so Sable Offshore, they've been making some moves. What really jumped out at me was their acquisition of the Santa Ynez Unit assets.
Yeah, the SYU assets, huge deal.
Yeah.
This wasn't just some overnight thing.
Definitely not. So fill us in. How did Sable Offshore even come to be?
Okay, so the 10K tells us that Sable, the Sable we know today, actually came together through a business combination back on Valentine's Day 2024, February 14th to be exact.
All right, so a Valentine's Day merger. Got it.
And right after that, get this, they closed the deal. They acquired the SYU assets from, wait for it, ExxonMobil.
ExxonMobil. Wow. Okay, so we're talking big players here.
Big time. And it wasn't just ExxonMobil. The deal also involved Mobil Pacific Pipeline Company.
Okay, so they're really getting into the pipeline game here.
Oh, yeah, up to their necks. But here's the thing. The deal closed in February 24, but the purchase itself was effective retroactively to January 1st, 2022. Kind of throws you for a loop, right?
So why would they do that? Make the purchase effective 2 years earlier?
Good question. It's tough to say for sure without being in the room where it happened, but I'd guess it probably had something to do with, smoothing out the transition, maybe some tax implications, potentially managing some liabilities a little bit better.
Interesting. So they basically got a head start, on paper at least. So what exactly did they get in this acquisition? What are these SYU assets all about?
Okay, so the crown jewel, the big prize here, is the Santa Ynez field itself. It's located in federal waters offshore California. We're talking prime real estate for oil and gas production.
All right, so offshore drilling. Got it. But it sounds like they got more than just the field itself.
Oh, yeah, definitely more. The deal included all the critical onshore processing facilities and the pipelines, the veins that connect everything and bring the product to shore.
So they acquired the whole shebang, basically, from
Yeah.
drilling to processing to transportation.
The whole 9 yards.
Yeah.
And for anyone who likes to play the stock market, Sable's common stock, you can find it under the ticker symbol SOC, started trading on the NYSE, the New York Stock Exchange, on February 15th, 2024. Their warrants are under SOCWS.
Okay, so they made this huge acquisition, got all these assets, but here's the thing. They're not actually producing any oil or gas yet, right?
Right, that's the million-dollar question, or maybe the billion-dollar question in this case.
So what's the holdup? Why aren't they pumping yet?
Well, the 10K lays it out pretty clearly. Production at these assets had been suspended under the previous operator, ExxonMobil, due to, remember this, the Line 901 incident.
Ah, right. That pipeline rupture a few years back caused quite a stir, a lot of environmental concerns, a lot of legal battles.
Exactly. And that's a big part of the reason why Sable can't just flip a switch and start producing. They need to get a bunch of regulatory approvals, make sure everything's up to code, and of course they got to finish those pipeline repairs, especially after that incident.
So it's not just about the technical stuff. They're caught in this web of regulations, right?
Oh yeah, big time. And there's this legal agreement, a consent decree, that hangs over all of this.
I think I saw that term in the report. Consent decree? What's that all about?
Right, so basically, it's a legal settlement with the U.S. Federal District Court, put in place after, you guessed it, the Line 901 incident. And this decree covered both Line 901 and Line 903, just to be clear. Now, ExxonMobil, they had already checked off most of the requirements in this decree before selling the assets. But guess what? Sable inherits the remaining obligations.
So it's like buying a house with some unfinished renovations. You got to deal with it, even if you didn't start the project.
Exactly. And this just adds another layer of complexity for Sable, as if they didn't have enough on their plate already.
So what happens if they can't get this whole production thing going? I remember reading something about ExxonMobil potentially taking the assets back.
Yeah, this is where it gets really interesting. The agreement they have with ExxonMobil, it includes this thing called a reassignment option. If Sable can't restart production from the SYU assets by March 1st, 2026, ExxonMobil can just take the assets back. No questions asked.
Wow, that's a hard deadline. March 1st, 2026.
Circle that date on your calendar. And here's the kicker. Sable wouldn't even get any compensation for the assets themselves. They'd only get a deemed repayment of the principal and accrued interest on their senior secured term loan.
So they better get a move on. That's a pretty strong incentive to get things up and running.
You got that right. It's like a ticking time bomb.
So they're racing against the clock. What have they done so far, and what are they still struggling with when it comes to getting those regulators on board?
Okay, so let's look at the timeline here. July 29th, 2024, Sable submits their restart plans to the Office of the State Fire Marshal. That's the OSFM, the big guys for pipeline safety in California.
California always gonna have their say, right?
Oh, yeah. But there was a good sign. December 17th, 2024, the OSFM actually approved Sable's enhanced pipeline integrity standards. That's a win. And as part of that approval, they got some state waivers for things like cathodic protection. That's a way to prevent corrosion, rust on those pipelines. And they also got a waiver for seam weld corrosion. Basically, making sure those welded parts of the pipes are strong and won't fail.
Okay, so they're making progress with the state. But what about the feds, the federal regulators? They gotta have a say too, right?
Oh, absolutely. That's where PHMSA comes in, the Pipeline and Hazardous Materials Safety Administration. They're like the federal watchdogs for pipeline safety. And good news, February 11th, 2025, PHMSA tells the OSFM that they're cool with those state waivers.
Okay, so another hurdle cleared. State and feds on board. Are we good to go now? Can they start pumping?
Hold your horses. Not so fast. The 10K says Sable is still going to submit updated restart plans to the OSFM. This will happen after they wrap up some anomaly repair and maintenance work on the pipelines. Think of it as the finishing touches before the grand opening.
So they're almost there, but still some work to do.
Yep. Got to dot the I's and cross the T's.
This whole process is like a giant puzzle, right? Dealing with both federal and state regulations, and at the same time, they have to actually do the physical work of repairing and maintaining these pipelines.
It's a juggling act, for sure. High stakes, lots of moving parts.
So let's break down that maintenance side of things a bit more, and also dig into those specific regulatory challenges they've been up against.
All right, so when it comes to maintaining these pipelines, Sable's got to play by the rules. Federal regulations say they have to address any problems, any anomalies, any weird things they find in those pipelines, and they got to do it fast.
No cutting corners, right?
Nope. And that consent decree we talked about, it essentially cranks those safety standards up even higher. On top of that, they got to deal with California's AB 864, which is all about the best available technology for preventing oil spills. That's CBAT.
Right, CBA. I remember seeing that. So what's the big deal with this CBA and AB 864? Why is it so important for Sable?
Well, AB 864 requires the OSFM to approve the use of the most effective technology to prevent oil spills in these coastal areas. So, they got to use the best of the best. Now, here's where it gets interesting. The previous operator, ExxonMobil, they submitted a CBAT plan back in 2021, and the OSFM gave it the thumbs up in July 2022.
Okay, makes sense. So they had a plan in place.
But here's the kicker. The OSFM, on July 20th, 2024, they reaffirmed that this 2021 plan is still good to go, still meets the requirements. They're like, yep, this is still the best available technology.
So Sable's essentially working off of a safety plan that was already approved for the previous owner. Seems like a pretty straightforward situation.
You'd think so, right? But there's a twist, a safety valve twist. See, that 2021 plan requires Sable to install 16 safety valves along those pipelines in the county. And they've been working on getting those valves in place.
16 safety valves. Sounds like a lot. And this is where the California Coastal Commission enters the scene, right?
Yeah.
I remember some mentions of notices of violation in the report.
Ding, ding, ding. You got it. September 27, 2024, the Coastal Commission drops a notice of violation on Sable. Their argument is that this safety valve installation, plus some other maintenance and repair work Sable was doing on the pipelines in the coastal zone, it all counts as unpermitted development. Basically, they're saying, hey, you need permits for this stuff, and you don't have them.
So the Coastal Commission is throwing a wrench in the works. And Sable's not just going to roll over, are they? What's their take on this?
They're pushing back for sure. Their argument, as laid out in the 10K, is that they don't need a new coastal development permit or any other fancy authorization from the Coastal Act. They say their work is consistent with what the coastal county has been doing for years, authorizing pipeline repairs without making a big fuss since those pipelines were permitted and built over 30 years ago.
So it's like an old house, right? If you're just fixing a leaky faucet, you don't need to get a whole new building permit. At least that's what Sable's saying.
Exactly. They see this as essential maintenance, not some brand new development that needs a whole new set of approvals.
But the Coastal Commission doesn't agree. So what happens next in this permitting showdown?
Well, things escalate a bit. November 12, 2024, the Coastal Commission issues an executive director cease and desist order. Basically, they're telling Sable to put down the tools and stop the work.
Whoa, they're playing hardball.
No kidding. This order requires Sable to do a few things, like submit an interim restoration plan and apply for a coastal development permit for that valve installation and the other work they've been doing. They could apply to the Coastal Commission directly, or they can go through the county.
So some options there. And does Sable comply?
They do. They get that restoration plan in, and they file some permit applications with the county. But here's the thing. That cease and desist order, it had an expiration date, February 10th, 2025. It was gone. Poof.
So game over, right? Case closed.
Not quite. This dispute, it's got more lives than a cat.
I'm sensing this isn't over yet.
Oh, you're right on the money. So February 14th, 2025, Sable sends a letter back to the Coastal Commission, responding to that initial notice of violation from September. They're basically reiterating their point, saying, look, the Coast Guard County already approved this work. We don't need any new permits.
They're sticking to their guns.
Absolutely. But 2 days later, February 16th, the Coastal Commission fires back with another notice. They're like, hold up. We might issue another cease and desist order. Don't get any funny ideas about continuing that pipeline work and valve installation.
So round 2 of the permitting battle, and how does Sable respond this time?
They basically say, bring it on. February 17th, they send their response, and they argue that the Coastal Act doesn't give the Coastal Commission the power to issue a cease and desist order in this specific case. And they make it clear that they're going to keep moving forward with the repairs that the county had authorized in a letter from February 12th, 2025.
So they're essentially calling the Coastal Commission's bluff, saying, you don't have the authority to stop us.
That's the gist of it. It's getting pretty tense.
Bold move. So what does the Coastal Commission do after that? Do they back down or do they double down?
They double down big time. February 18th, the very next day, they issue not one but two things. First, a new executive director cease and desist order, specifically focused on the onshore pipeline work, saying it's unpermitted.
Okay, so trying to stop them on land.
Right, but then they also issue a notice of intent to commence proceedings for a full commission cease and desist order. This one's even bigger, potentially covering both the onshore pipeline work and the offshore SYU facilities. They're really expanding the scope of the fight.
Wow, they brought out the big guns. So as of this 10K report, it's clear this is a full-blown legal and regulatory battle. What's the last thing we know about what Sable's doing in response?
Okay, so March 6th, 2025, Sable sends more information to the county. This is about some of the repairs and maintenance they finished before they got that first notice of violation back in September. They're arguing that this work was already covered under the original environmental review and permits from way back when, and they're asking the county to put it in writing to confirm their understanding.
So trying to get the county on their side in this fight against the Coastal Commission, it's like a three-way tug of war.
Absolutely.
This is a fascinating example of, a company trying to revive this really critical energy infrastructure, but they're facing some serious pushback from regulators who are, focused on protecting the California coast. It's a real clash of values and priorities. But let's switch gears for a bit and talk about the money. What's the financial health of this company look like, especially since they're not currently selling any oil or gas?
Right, that's the big question. The 10K is upfront about it. Until production restarts, they're not bringing in any revenue from oil and gas sales. They're surviving off the cash they have on hand right now, using it to fund their operations, including this whole effort to restart production.
So they're burning through their savings, hoping they can get the pumps flowing before the money runs out.
That's the gamble they're taking. And the 10K itself lists this as a major risk. If they don't have enough cash, they might not be able to finish those repairs, get those approvals, and then ExxonMobil could swoop in and take those assets back.
Talk about pressure. So aside from this immediate cash crunch, what are some other big financial risks that a company like Sable, operating in the oil and gas industry, typically has to deal with?
Well, there's always the price roller coaster. Commodity price volatility, that's the industry term for it. The prices of oil and natural gas, they go up, they go down. Sometimes they do crazy loops. It's unpredictable, and it's influenced by a million things that Sable can't control.
Like what kinds of things?
We're talking global supply and demand, You know, are there enough barrels of oil sloshing around out there, or is everyone thirsty for it? Then there's geopolitical events, wars, trade agreements, sanctions, all that fun stuff.
Yeah.
And even weather can mess things up. You know, hurricanes shutting down production, cold snaps driving up demand,
So they're at the mercy of the market.
pretty much. And these price swings, they can make or break a company like Sable, especially once they start producing and selling.
So what do they do to protect themselves? Are they using any fancy financial tools to hedge their bets against these price fluctuations?
The 10K says that right now, Sable's not messing with any commodity derivative contracts. But they do say that once production kicks back in, they might start using those.
What are these derivative contracts exactly?
Think of them as insurance policies against those price swings. You know, if the price of oil tanks, they've got this contract that cushions the blow. These things can help them smooth out their cash flow, make things more predictable. They might also use interest rate swaps if they take on debt with variable interest rates.
Interest rate swaps, that sounds complicated.
It can be, but the basic idea is they're exchanging one stream of interest payments for another, trying to lock in a favorable rate and avoid getting hammered by rising interest rates.
So they're playing defense, trying to minimize their risk. But it's not just about managing finances. They're also operating in a pretty cutthroat industry, right? How does Sable stack up against the competition, financially speaking?
Yeah, the oil and gas world is a tough place to be. Lots of big sharks circling. The 10K acknowledges this, saying the industry is super competitive on every level, getting good people, getting the equipment, securing those drilling rights.
So it's a fight for resources.
Big time. And a lot of Sable's competitors are these massive established companies with deep pockets, cutting-edge tech, and a whole army of experienced workers. It's tough for Sable to compete with that.
So they're the underdog in this fight.
Kind of, yeah. They might have to pay more to get the same resources, and that can eat into their profits.
So it's not all sunshine and rainbows for them. But it's not all doom and gloom either, right? I noticed they mentioned something about carbon sequestration in the report. That sounds like a more forward-thinking part of their business.
Right, they're dipping their toes into the world of carbon capture. The 10K says they might explore opportunities for long-term carbon dioxide sequestration on the outer continental shelf, basically capturing carbon emissions and storing them underground, keeping them out of the atmosphere.
So it's like cleaning up the mess, trying to offset the emissions from their oil and gas production?
That's one way to look at it. And this is a new area, made possible by the 2021 Infrastructure Investment and Jobs Act. The government's giving out leases for this kind of thing now.
So they're jumping on a new trend.
Yep, seeing if they can leverage their existing offshore infrastructure for these carbon capture projects. Of course, they still got to deal with all the permits and regulations.
Always the permits. But it sounds like a good move, especially with the whole world talking about reducing emissions. Speaking of which, the 10K also talks about all those greenhouse gas emission regulations. It's a complicated landscape, right? Always changing.
It's like a moving target. They highlight a few key things. First, there's the Inflation Reduction Act, the IRA. That was a big deal. It introduced a fee on methane emissions starting in 2024. Basically, a tax on those emissions, making oil and gas production more expensive.
So a hit to their bottom line.
Yeah, potentially. But then Congress went and repealed that rule, so now it's unclear if it'll actually happen. This kind of uncertainty makes it tough for companies to plan for the future.
So they're in limbo. And didn't the IRA also include some big incentives for renewable energy that could indirectly affect Sable's business too, right?
Definitely. The IRA is pushing for more solar, more wind, more clean energy, and that could mean less demand for oil and gas in the long run. It's a slow burn, but it's happening.
So the energy landscape is shifting and they got to adapt. Aside from the IRA drama, what other emission-related regulations are they keeping an eye on?
Well, there's the Paris Agreement, the big international climate accord. The U.S. joined, then maybe left. Who knows what's going on with that? But the point is, there's uncertainty at the federal level about emissions reductions. Meanwhile, California, they're forging ahead with their own, often stricter regulations. And remember, all of Sable's current assets are off the California coast, so they got to play by California's rules.
California, always leading the charge, for better or worse.
That's one way to put it.
But it's not just about the broad emissions picture. There are also specific regulations for the pipelines themselves, right? PHMSA, they're busy with that.
But yeah, PHMSA is constantly tweaking the rules for natural gas and hazardous liquids pipelines.
Yeah.
We want to make sure they're safe, that they're not leaking, that they're not could cause another environmental disaster.
Makes sense.
So they're updating regulations on pipeline integrity management, leak detection tech, those safety shutoff valves. In fact, they just issued a final rule on leak detection on January 17th, 2025.
So they're staying ahead of the game, trying to prevent the next big spill.
Yep. And the 10K mentions this new rule, but it hadn't been officially published yet when they filed the report, so they're still figuring out exactly what it means for them.
Always playing catch up with the regulations. It's like a full-time job in itself.
Oh yeah, definitely.
They also briefly touch on derivatives regulation in the report. That's under the Dodd-Frank Act, right?
Yeah.
What's the potential impact of that for Sable?
Right, Dodd-Frank, that was a huge piece of financial reform after the 2008 crisis.
Yeah.
Part of it was about regulating those derivative markets, those financial instruments that can be used for hedging, but also for speculation.
Right, they can be risky.
They can be. So Dodd-Frank's trying to rein them in. Some of the rules are in place, others are still being worked out. The 10K says these regulations could make it more expensive for Sable to use derivatives, harder to get their hands on them. And if they can't use derivatives effectively, their profits could be more volatile, less predictable.
So another layer of complexity, another risk factor.
Definitely.
And of course, we can't forget about California. They're always a big factor in this story, right? The 10K emphasizes that California's got a lot of power when it comes to regulating oil and gas operations.
Oh, yeah. California's got a long history of regulating this industry. And they're not shy about using their power. They cover everything, from the initial permits for drilling new wells to how much oil and gas companies can produce to environmental protection measures.
So they're involved at every stage.
Every step of the way. And the 10K highlights that these regulations, enforced by agencies like CalGEM, the California State Lands Commission, they've been getting even stricter in recent years. So Sable's got a lot of hoops to jump through.
And California is not likely to back down anytime soon, especially with their focus on climate change.
Nope, they're doubling down on those environmental goals.
So with all these risks and challenges, safety has to be a top concern for Sables, right? What do they say about their safety practices in the report?
Oh yeah, safety's front and center. They talk about their health and safety program, how they train employees, manage contractors, do risk assessments, report incidents, and try to prevent accidents from happening in the first place. They've even got dedicated safety people at their facilities doing on-site training and safety meetings.
So they're not taking any chances when it comes to safety.
Nope, safety first.
And to attract and keep good employees, especially in this competitive industry, they got to offer a good package, right? What do they say about compensation and benefits?
They talk about being competitive, offering salaries and bonuses that are in line with the industry standards. They also mention a whole bunch of benefits: medical, dental, vision, life insurance, disability insurance, paid time off, and a 401k retirement plan with a company match.
So the usual suspects, but still important for attracting talent.
Absolutely. You got to keep those employees happy.
The risk factors section of a 10K is always interesting reading. What were some of the biggest risks that Sable highlighted in their report?
Oh boy, they listed a whole laundry list of potential problems. It's a bit of a reality check. Some of the big ones include not having enough cash to actually get production going by that deadline, those crazy oil and gas price swings, the potential for those new derivatives regulations to mess things up, the inherent risks of offshore drilling, restrictions on getting rid of waste materials, the need to put up cash for bonds and financial guarantees, the threat of cyber attacks, stock price volatility, the possibility of getting delisted from the NYSE, some weaknesses in their internal financial controls, their total reliance on restarting production by March 1st, 2026 to avoid losing those assets, the strict terms in their loan agreements, all those environmental regulations, California's potential to further limit oil and gas production, the impact of those renewable energy incentives in the IRA, and their dependence on those pipelines and processing facilities.
Wow, that's a lot to worry about. So they're facing some serious headwinds. What about their actual financial performance in 2024? What do the numbers tell us?
Well, as we've discussed, they didn't have any revenue from oil and gas sales in 2024, which makes sense since production was shut down. But they did have a lot of operating expenses, so they ended up with a net loss for the year. And they specifically point out that a big chunk of those expenses came from the merger, the business combination that created Sable Offshore Corp, and all the related costs.
So they're in the red for now, but hoping to turn things around once production starts.
That's the plan.
One last thing, they mentioned that they're classified as an emerging growth company. What does that mean in plain English?
It basically means they get a bit of a break from some of the stricter reporting requirements that bigger, more established companies have to deal with. It's like a grace period for newer companies. They don't have to do as much auditing. They can disclose less information, especially about things like executive compensation. This special status lasts until they hit certain milestones like revenue, market cap, or amount of debt.
So a little bit of breathing room as they get their feet on the ground. Well, this has been a deep dive, for sure. We've really gotten into the weeds of this 10K report. It's clear that Sable Offshore is at a crucial point in their journey. They made this big acquisition, they're trying to restart this major asset, but they're facing a whole bunch of challenges from regulators, from the market, from the financial world. It's a complex picture.
Totally agree. The key takeaway for our listeners is that Sable's future is riding on their ability to get production going at those Santa Ynez Unit assets.
Right.
And they've got this regulatory battle with the California Coastal Commission. They're racing against the clock to meet that deadline with ExxonMobil. And they're operating in an industry that's constantly changing, with volatile prices, new regulations, and the need for serious capital investment.
The aha moment for me was seeing how Sable's trying to bring back online this essential energy infrastructure, but they're butting heads with these California regulators who are super focused on protecting the environment. It really shows how complicated it is to operate in this space, even when you're just trying to maintain existing production, not even talking about exploring for new resources.
Absolutely. And that brings up a really interesting question for our listeners to think about. Given California's tough stance on environmental protection and the global push for cleaner energy, how could Sable's carbon sequestration plans become a key part of their long-term strategy? How can they use this to build a better relationship with California and position themselves for the future? It's not just about pumping more oil and gas anymore. They got to adapt, they got to innovate, or they might get left behind.
Food for thought. Thanks for diving into this with me.